Two people, same salary, same job, same age. One retires with £1.3 million. The other retires broke. The gap between them is one number, £100. In the next hardly 6 minutes, I'll show you what that number does and why almost nobody uses it right. I used to think saving money was something I'd get around to eventually. Then I watched someone 2 desks away from me lose their job with zero warning. No severance conversation, no heads up, just gone by lunchtime. That was the moment it hit me. A paycheck isn't a guarantee. It's a rental agreement that can end any month. So before I touched a single investment, I built a cushion. Not a fortune, just enough to survive if the income stopped tomorrow. 1 month of expenses, then 3, then 6. That cushion is what makes investing safe, because without it, one bad month forces you to rip money straight back out of your portfolio. And that's how years of growth get erased in a single emergency. Here's where it gets interesting. Let's run the experiment. You invest £100 every month into a simple index fund. Average return, 10% a year. The long-run historical average for a diversified stock portfolio before fees or tax, which will vary depending on your account. You've put in £2,400. Your account? Around £2,650. That's £250 of free money. Underwhelming, right? This is the part where most people quit, because early on it looks like nothing is happening. But here's the part they don't show you. Year 10. Same £100 a month. You've contributed £12,000 total. Your account is sitting closer to £20,500. That's £8,500 you didn't work a single extra hour for. Year 20. You've now put in £24,000 of your own money. Your account has crossed £75,900, more than triple what you contributed, and you haven't changed a single habit. Year 30. Total contributed £36,000. Account value north of £227,000. Year 40. You've put in £48,000 of your own money across 4 decades. Your account over £637,000. 92% of that final number was never yours to begin with. It was manufactured by time and compounding, which is really just interest, earning more interest on a loop for decades. Drop your number in the comments. What could you actually commit to putting in every month? £50, £100, £200? I'll read the good ones. And if this is the first time you've actually seen the math laid out like this, hit subscribe. You don't have to do anything else. Every video here follows the same rule. Simple math, zero hustle. Let's make it realistic, because nobody's income stays flat for 40 years. Say you start at £100 per month in your 20s. By your 30s, after a couple of promotions, you bump it to £300 per month. In your 40s, £600 per month. In your final working decade, £800 per month. Run the same 10% average return across all 4 decades, and here's where you land. Over £1.3 million. From just £224,000 contributed. Compounding did the other million. Waiting for the right time is the most expensive mistake in finance. Every generation has had a reason to wait. 2008 had a banking collapse. 2020 had a pandemic crash. The 2020s have had inflation spikes and rate hikes. There is always a headline built to scare you out of starting. And here's the uncomfortable pattern. By the time the news feels safe again, prices have usually already climbed back up, which means the people who waited for certainty end up buying in at higher prices than the people who just started anyway. This is the entire logic behind the phrase you've probably heard 100 times. Time in the market beats timing the market. Consistency beats prediction in every time horizon that's ever been studied. Search how to invest and you'll get 5,000 conflicting answers in the first 10 results. Buy individual stocks. No. Buy crypto. No. Buy dividend stocks. It's not that people are bad with money. It's that the information is scattered across 100 sources and nobody hands you the simple version. The simple version is this. Pick a low-cost, diversified fund. Automate a monthly contribution you can actually sustain. Leave it alone for a decade or more. That's the entire strategy that built the numbers you just saw. You don't need £10,000 to start. You don't need a genius business idea. You need £100, a decade, and the discipline to not touch it. If you want the exact steps, which account to open, which fund, how to automate it, that's next video. But the one thing you can do tonight before you close this tab, set up the standing order, £100, automatic, done. Comment lazy if you're starting your £100 per month this week. I want to see how many of us actually do it.